Hello friends, welcome to my channel and thanks for watching this video. Friends, welcome to the another session of the series of a US weekly market report. So last week I have talked about couple of things and I have also said that the equity market trend has been intact and more specifically about the VIX. Now this is the snapshot which you can see on your screen about how the market has ended, and there is a very strong trend in all the indices, all the major indices, DJI and NASDAQ, S&P 500, and more specifically I talked about 17 when I specifically talked about VIX. And as you can see here, and those who are following my videos regularly, they would understand very easily that what I have said about the VIX, and currently it closed at 16.69. So this is very symbolic because in the monthly chart of CBOE volatility index, 16 below 17.45 or below 17.5 is a major breakdown in VIX, and when the VIX going downwards, we will see an inherent strength in the stock market, and that's what you can probably see in the weeks as well as in the months to come, that slowly but steadily the stock market will go on the upside. Now this is what you can see as an introduction. Now one more important thing which I would like to talk about, or I will say I will start my session with this chart. This is nothing but the US. Here we have US ISM manufacturing index, or the PMI index. Now the last close for April 1st 2020, it is above 64. Now the level of 64 has actually occurred after 34 or 35 years. So we have never seen 64 with such an strong economic data in the past 34 or 35 years, and that's how the strong data is. So it is it is not about the Fed is printing tons and tons of money. We have global liquidity sloshing all around the world, but the thing is the data is showing something else, and when you have such strong data, obviously the stock market will move and will move sharply on the upside, right? So this is a very important thing which you need to understand and know about. Now starting with the chart, this is the chart of CBOE volatility index, or the monthly chart, and in my previous videos I have talked about certain levels more specifically. As you can see here, this level, okay, this is the level which I have talked about in my previous video. Now as you can see here, 17.43. now this the trend has broken down, and the VIX is currently closed at or quoting at 16 point, somewhere near 16.63. now what does that mean? Okay, so if you are looking at the trend, I will use this one. Now you can see that if it continues to hold below 17.43, and if you want one more level to look at, you can probably use 14.23. if these two levels get crossed on the downside, you will have 9.59, which is the lowest level. Now as you can see, in 2006 December this has touched, in 2017, and in the year 1993. As you go back and check out the stock market or equity market in these particular dates, what you will find here, that the stock indices was trading at all-time high at specifically in near to these dates. So if that will happen, slowly but steadily we will see these kind of moves in the months and in the years to come. So the crux of this long statement is that we will have strong equity market going forward, definitely we will have a big crash. You will see channels, those who are talking about recession and all those things. That will be a part of cycle, there is no doubt about it. But what about the upside we are going through? Are you going to sit out and enjoy the rally, and if you are satisfied with only watching the rally, that's fine, or you want to participate, that is up to you. Now we will start with the chart of Dow Jones indices. Now as far as Dow Jones is concerned, I have talked about the level of 35,000. So this is the monthly chart, but we will drill down to the hourly chart, and we will look at the trend, that how it is moving. So as you can see here, so this is the chart for or the hourly chart of Dow Jones. Now here we have, okay, and from here it has moved something like this. Okay, so the trend is pretty simple. So if I draw a line like this, what you have here is something like this on the upside. So what we have on the downside for Dow Jones will be 33,308, and on the upside the target that we are looking at will be 34,900, or in between 34,900 and 35,300. So this is the level that we are going to look at in the upcoming days, or as well as in the upcoming weeks. Now those who have watched my previous videos on S&P 500, so it's like 7-8, or I don't know whether it is 1 year old, but the thing is, what I have said about S&P 500 is that it will definitely touch a high of in between 6,000 and 7,000, and I am very firm with the statement. There is no change in that. I know sooner or later this will happen, and you will see that when I started that video, the indices was probably trading at a low of I don't know, 2,000 or somewhere else. Okay, but since then it was a staggering move, and the current trend is still on. Okay, so there is no denial I have that it's going to move, and move pretty fast on the upside. Okay, now as far as the S&P 500 trend is concerned, what you can see here, so this is what we have in terms of trend for S&P 500, where if you have the chart, you can see that there is a resistance at 4145, but if Dow Jones and NASDAQ is strong, obviously the resistance will get broken out on the upside. Okay, so for the time being, if you are looking at S&P 500, what we are going to do, we are going to do something like this. So the levels that we are going to look at will be in between 4145 and 4179. Okay, because there is a resistance which we can see on the screen, so obviously we will not deny it. Now the NASDAQ part of the market. Okay, so the NASDAQ part of the market is very strong, and as you can see, it has made a double bottom kind of pattern here, which, so here you can see the W. So a double bottom kind of pattern has been seen in this particular chart. So, and there is a breakout which has already happened, okay, over here. So as far as levels are concerned, you have the resistance at 13,612, which has already get crossed, and the level which we are going to look on the upside will be 14,149, which is the uh, previous high that the indices has made. And once it broken out above 14,189, we will have a further trend on the upside. So you will see overall strength in the market, and big ticket items are moving up slowly and surely. The other part of the market will start rising up again on the upside, right? Now last time I have also talked about the 10-year US Treasury bond, and I have said that probably it has entered into a consolidation phase. Now if you are looking at this trend, okay, so if you are looking at this chart, what you can see here is something like this. Okay, so in the last couple of days or weeks, it has actually entered into a consolidation, and it's been trading in between a range. Now it's a matter of time, because if things turns around very sharply on the upside, definitely we will see some bond buying by the central bank of United States of America. So the levels which you need to work on as far as the trends are concerned. So on the downside you have two support levels. So the first support will come at 1.62 and 1.59 on the downside, and on the upside it is trading in between 1.74 and 1.77. So these are the two levels that we are working with for the time being. And so this is a good thing that it's been in a consolidation, and if it is in a consolidation, so you will see that stock market will started to rise and rise again with a steady move, I would say. Now dollar is another thing which is showing some great strength, I would say, and it is very much available in the data, because in the PMI data, where it is holding at a high of 35 years with such a strong and staggering data, obviously you will have the dollar index standing tall. But in the current situation, if the dollar index continues to hold that much strong, now that will be a problem for the US economy. So if the bull market have to work, then the at least dollar index need to go on the downside, not on the upside, otherwise there will be a problem. Now looking at the kind of indices we have, so this is the level in between which the DXY is currently trading at. So it is exactly holding near to the support levels. Now it is very important to look at whether it will hold at or above 92 or not, okay, because if it hold and makes a bounce back from 92, you will have your next target on the upside, that will be 92.7. and looking at the kind of indices we have of dollar index, it can go up to 94 as well as 94.15. so these are the levels which may work out on the upside if things looks good for this particular indices. Otherwise 92 will be a crucial support, and if 92 gets broken down, then in that case you will see that the indices will fall in a very sharp way. Now I will show one more thing here. So this is all about technicals. So if I, instead of drawing my line, the support line from here, so just you need to remember the 92 mark. Now if I draw my trend line like this instead of the previous line, what you can see here So what you can actually see here is a trend breakdown. Okay, so this is up to the person who is drawing the chart and drawing the chart line. So as you can see here, there is a downturn, and let me tell you one thing, that you can see there is a support line. Okay, you have three supports here, and it will the trend breaks down and it went up and it hits the resistance line. Previously it was the support line, and it again fall down. So if I just tilt my line, you will see that the indices is trading in between 92.42 on the upside, and on the downside you have a support of 92. So anyhow, 92 will be your crucial support, and if 92 gets broken on the downside, so by changing a simple line like this, you will see that the trend has already broken down, but I will wait for 92 to get crossed on the downside, and you will see further rally, and the strength will further increase in the equity market. So that's also a very important thing to note, and probably the things has already started here. Now in this session, it is also important to talk about the infrastructure bill, which the current US government is trying to make it law or get passed. But you will see that there are some articles which will say it is not possible to pass, and when the entire opposition is on the other side, and they don't want it to be passed, because we already have it has already passed $1.9 trillion of package. Now with $2 trillion proposal, it can, in some articles you will see it can extend up to $3 or $4 trillion. So let's see how the things will work out, and we will talk and we will update this story again, because you have parties on both the sides talking about the positive as well as the negative part of the story. So let's see how things will work out, and we will talk on that, because see, the thing is, it is not about how the market will respond, because if infrastructure works out well, and if things, if the, let's say, if the bill get passed and money started pouring in, so I don't want to talk about whether it will work in a good way or bad way in the society or not, so that economists know better. But in terms of stock market, this is a very positive thing, because the balance sheet of the company will improve, the balance sheet of the bank will improve, people have money to spend, and all these things will propel up the market in a very sharp way. So having said that, as a summary, I will say that the trend for the stock market in the upcoming weeks, and probably in the upcoming months as well, looks very good, steady and stable. So you do whatever you want to do, but don't try to unnecessarily short the market. Otherwise, you will have a problem. I'm not talking about it will not correct 40-50 points, or we will not have 2 or 3 days of correction, but that's a different thing. Okay, I'm not in that camp who is talking about who is not talking about recession, but I am not in that camp, so who is talking about recession on daily basis, irrespective of the fact that the market is going up, and probably we all know someday it will go down. But the thing is, we don't know when will it happen. Okay, and if you try to exit from the market, don't want to enter, that is up to you. But if you are in the market, and if you continuously go on the wrong side of the trend, current trend, if the trend is going up and you are saying it will fall down, what will happen? I will left that fact on your virtue. So that's the individual thought, what he or she thinks. But the thing is, trend looks bright, trend looks strong and steady, and it will probably do so in the times ahead. So this is the end of the video. If you like this content, do share your thoughts in the comment section and subscribe my channel. Lastly, take care of your family and friends.